Let's do a quick 3-minute video on the trade that I took closing off today's trading day for June the 3rd of 2025 using ICT's concepts. The trade that I took was the second leg of the MMXB model, which is the markets maker buy model. And let me jump right into the charts here to show you what happened during the day and how I framed my bias. So since the morning here, what price did since 4 a.m., it was essentially pushing up in one direction. You can see here on the 1 hour pretty clearly. It finally hit this larger pink area, which is a daily fair value gap. My initial targets for the morning session was the lower half of it. In the afternoon, I saw that it was punching into the last fair value gap that was available to us before the next highs that price is going to be most likely drawn to tomorrow. And when price got here, it started to stall. You can see that the bodies weren't closing within this fair value gap. Price wasn't breaching above the midpoint of it. It did ever so slightly from a wick perspective, but again, nothing meaningful. And what price ultimately did is it essentially shifted market structure to the downside. On the 1 minute, it used a very prominent fair value gap, which price respected 1, 2, 3, 4, 5, 6 times. And the moment that it closed below it, that was indication that most likely it's going to drop to these relative equal lows from the lunchtime session. So what I tried doing initially is I tried positioning a short off of 728. Price never got to my entry, and unfortunately it ran without me. And then when I saw that price started to push back into SIBI that it created, and candles were really failing to stay above the mean threshold, I had a feeling that that's going to be the second push into this level right here, into the lunchtime lows. So this is what it can be seen as, and most likely I might create a quick video on this, but it's called the market maker buy model, where we have an area of original consolidation. It creates lows for us to target later on. Price moves away from it. It hits a specific higher level target PD array. It reverses and essentially within 2 legs pushes back to this level of consolidation, which you can see here. So the final trade was a 1.8 to 1 RR risk to reward. I was fairly happy with it. I did try to catch along after that once it got into this inversion fair value gap. So it took lunchtime lows, inverted a fair value gap. I was just waiting for it to kind of pop back into it, revert it, and I would have taken it up higher. Again, the upside move, it looks like it's pretty much exhausted. It wouldn't have made much, but at least it would have been a 1.5 to 1 RR. So hopefully you learned something. I think this was a very clean afternoon trade. And I guess on that note, if you enjoyed it, feel free to subscribe, like, and not, I'll be seeing you on our live stream tomorrow morning at 9:15. Take care, have a good one, and talk soon.